perceived weakness in China has potentially global ramifications, which begs the question, why has the Chinese stock market been so weak, and what do we need to be thinking about there?
Sure. The Chinese stock market is at a 10-year low currently. And there's a couple different reasons we can point to, and I guess I'll start with the fundamentals. And it's frankly that the economy in China is not doing well. Manufacturing has been slipping, and exports are at a low, and those are two very critical pieces to their economy. So they're just not doing great. Furthermore, it's almost impossible to assess, the validity of their economic output and their economic data that they provide to the rest of the world. We got a GDP reading at 5.2% recently that almost no one really believes, and a lot of people think it's a lot lower than that. Technically, kind of the elephant in the room, which over the last several years has been involvement of the Chinese government in business. In Beijing, the government has propped up businesses that are near and dear to home and close to home. But in the Hong Kong index, which is more tech-centric, think of Alibaba, JD, companies that operate globally and outside of China. They haven't had that same luxury. And for anything, they've actually been punished for not necessarily playing nice in the sandbox when it comes to listening to what what Beijing wants out of them. So we're in need for economic stimulus. These are self-inflicted wounds that China has implemented on themselves, and to get out of this, there needs to be some self-inflicted remedies. Just today, we actually did hear that there is some major stimulus coming that the market has been waiting for. The reserve requirement is down to 0.5%, and that should hopefully get some more economic activity started. I thought it was quite interesting that Jack Ma, Alibaba CEO and founder, haven't heard a whole lot of him in recent years. He even went missing for a little while, if you can remember. Not to say he's reemerged by any means, but he just put $50 million of buying back his own stock of his own company, Alibaba, which is quite the vote of confidence. And coincidentally, we've seen a bit of a reversal already in the MCHI, which is one of the major indices tracking the entire Chinese government. The Chinese market. So the ramifications, though, to your point and back to your question, it's a major economy. If there's more of a slowdown, if we see more of a devaluation of the Ruan, this will affect the U.S. It will have a spillover effect. So to see that there's a bit of a reversal, some stimulus occurring, some stability in the currency, that should actually be a nice tailwind as opposed to a headwind on the global economy.
Stonebriar Wealth Management, advisors for your life.
This is not an offer to buy or sell securities. No investment process is free of risk, and there is no guarantee that the investment process described herein will be profitable. Investors may lose all of their investments. Past performance is not indicative of current or future performance. It is not a guarantee.